Let's talk about inflation. So recently we have seen that inflation has increased the construction cost. This is a small map which tells you the different parts of the in building a house, how is affecting the construction companies throughout Australia. Now, because of that, one thing is clear, that we have to be very sure who we are asking to build our houses, right? So we have to select that, select the building company very carefully. But it also tells us, it also makes us worry how the inflation is going to affect my assets. Can I buy the property now or should I wait? And for that, I got this chart. This chart is available on RBA website. The sources are from the data has been collected from various sources. So look at this purple line. This purple line is actually the new dwelling cost, this construction cost of new dwellings because of increase in inflation. But because of this increase in inflation, look at the values of the dwellings right now. With increase in inflation, the values of dwellings increase exponentially. And look at the housing prices. So this is the value of new dwellings, but look at the prices of the existing homes. They actually increase even more. So if you think that you should wait because the construction cost is high, you think that because of the construction cost you can't buy right now, trust me, it would, based on this data, it looks like it will be even harder for you to buy in future if you don't make a right decision right now. So again, depending upon what side of fence you are, if you own an asset, which grows in value with inflation, you are actually taking advantage of that. But if you don't own an asset which grows in value with inflation, it means you are adversely affected because of inflation. So again, if you are on the investor side, or if you are planning to be on investor side, then good for you, good for your family, good for your future. But if you're not planning to do that in real soon, then this is a data not from me. This is a data from RBA. This is more than 45 years of data, 40 years of data, which clearly shows that in long run, if you don't take advantage of inflation by owning an asset which grows in value with inflation, you are going to affect adversely. So what are the learnings for the property buyers? I believe that these are the three most important learnings for any property buyer. Purchase as early as possible. Why? Because inflation is inevitably going to happen, right? And you want inflation to happen because that makes sure that economy is rising. Number two, purchase as many as possible, right? The more assets you have, more they grow in value, the more you are beating the inflation. You're actually using inflation to your advantage. Hold as long as possible. If you buy an asset, and unless you are going through a financial distress, keep it, hold it, because every year it's growing in value, every year. We all know that rents are going up now. Why? Because of inflation, because of interest rate combined. So if you own a property, you can take advantage of both inflation and interest rate to your benefit. Look, what I believe that Robert Kiyosaki knew about this thing, Kiyosaki knew about these principles very early. Look what he says. I don't save money. Save is a 4-letter word. I like to borrow money because I can get richer faster on borrowed money. I say I have what is called retained earning. So I don't have to save money. If I need money, I'll go out and borrow it. Why he says that? Let me give an example. Let's say you buy $1 million property. Australia is one of the rare countries where you can buy a property with only 5% down payment. Most of the people make 10% down payment. So let's say you made a 10% down payment, you made $100,000 investment, right? If you want to buy $1 million property on a loan, but if you want to buy $1 million property entirely from your own money, you have to pay $1 million, right? But Robert says, you know, I want to borrow the money. So he goes, buy $1 million property, pay $100,000. Next year, the property is going to grow. In Australia, the property grows at the rate of 7 to 9%. Let's say it grows by 7%, right? What happens to your property value next year? It is $1,070,000, right? So your original investment was $100,000. You get a property which grows in value by $70,000 in next very year. What is your return on investment? Just just remove all the variables out for the simplicity. What is your return on investment?
70%.
70%. Perfect. Now tell me one thing, which asset can give you 70% ROI year on year? Can gold give you 70% ROI? Can you buy gold with 10% deposit? No. Can shares give you 70%? Nobody can say that for sure. Can crypto, Bitcoins give you 70% return on investment? So guys, that's why Robert says that borrow money, but invest it smartly so you can grow faster than what you have to pay back. Purchase as many as possible. This actually lines very much matches the second quote from Robert. Real estate investing, even on a very small scale, remains a tried and true means of building individuals' cash flow and wealth. Number 3, Robert says that once again, 90-10 rule of money applies. 10% of borrowers in the world use debt to get richer. 90% of use debt to get poorer. And this applies to Australia very, very much. Why? Because in Australia, 80% of the property owners don't have investment property. Only 20% has investment property. Out of those 20, 10 are not very comfortable all the time. They feel that they have a loan or they have a burden. But 10 knows that, you know what, doesn't really matter, because if they want money, they can just sell the property, take the cash out. But in the meantime, let's go get another property which can grow faster than inflation, which can grow faster than my debt, and I can pay back whenever I feel comfortable in long run.
If you like the content of the videos, then please don't forget to like it and share it. For future updates, please subscribe the channel. Thank you.